Hey everybody, today is September 21st, 2024, and today we're going to talk about the stock market and where I see the stock market headed for the month of October. Before we begin, please read the disclaimer. You can pause this video as you read it. Okay, so this month we had a pretty good month. We started the month off basically coming down to the 100-day moving average, which is gold line, and then we basically bounced up. And we had a very important month because this is the first time. Well, we had two important things. First is that the CPI report for the month of August showed that we are still continuing down, right? And now last time we were doing from 3.0 to 2.9, which was really important because it's the first time we were under 3.0 for the last like 2 years, right? And now we've continued the trend down, right? So earlier this year, people thought we were going to get a lot of rate cuts, but what happened was the CPI inflation report basically said that it showed that the trend was actually going up. So we basically had those rate cuts on the delay, and that caused a bit of volatility in the market. But eventually things peaked, and we basically been on this downtrend for the last 6 months, right? And we finally went below 3.0 in the last report, 2.9, and I said in the last report, the fact that we're getting closer to 2%, which is the Fed's target rate, that would increase the chances of the Fed finally cutting for the first time, probably in September, right? And I said that in the previous couple of videos, and that's exactly what happened this time, right? With the CPI report showing us not only coming down more, but like a pretty drastic drop to 2.5, right? So we're that much closer to the 2.0 Fed target rate, and so that gave the Fed confidence to cut not only I think I originally predicted a 25 basis point cut. They actually cut 50 basis point, which is like the first time they've done that since I believe like 2007 maybe, 2007 2008. But it's very rare they do. They usually cut by 25 basis points when they first start cutting, right? So people are saying, okay, they're gonna cut a couple more times this year, and then next year they're gonna cut even more, right? So right now we're at 5.33. They haven't changed. This hasn't changed yet, but after the 50 basis point cut, this should go below 5%, right? And so you can see how we had this drastic rise in 2022 to fight inflation, right? As inflation went up, right? 2022 peaking in June of 9.1, right? And since then we've rose interest rate so much at the fastest pace that we've risen it since in the 1980s that the inflation has just gone down. And now we're back at 2.5 for the first time in several years, right? So this is a big deal because this is going to give us, usually the stock market moves inversely to the rate cuts. So when the rate cuts go down, that's usually there's more money flowing in, and lower rates makes it easier and cheaper to borrow money. And people are just it just stimulates more money to move in the economy, right? And that's going to probably make the market move even higher. The market basically reacted by hitting new all-time highs, right? S&P, Dow, and the NASDAQ, right? So, and meanwhile, the VIX has also been coming down, right? We had this huge intraday spike off the Japan trade carry unwinding. And also, we've seen rates come down, right? And yeah, meanwhile, the dollar, do I say the dollar? The dollar also has been coming down in response to expected cuts, right? And this has also been good for, of course, gold, which has been hitting new all-time highs, right? And also more risk-on assets like Bitcoin, which I'll cover in a different video. But for this video, the stock market, right? The S&P 500, this one is SPY, the ETF that tracks the S&P 500, has been moving up higher and higher and higher, and yeah, things are looking really good. And you see how far we've come since the 2022 correction, right? With this, a pullback to the 200-day moving average, down to the Fibonacci support level, moving sideways for about 2 years, and then just in this beautiful uptrend, right? Since the lows in October 23, right? Look at the monthly chart. We have 5 monthly green candles in a row. As you can see, we're starting to hit the overbought zone a bit, right? 5 monthly green candles in a row. But we also have unprecedented action from the Fed, right? 50 basis point cut. So we'll see how the market reacts to that going forward with additional cuts if we're able to. Because usually when the Fed starts cutting, that's usually a sign that a recession is coming, right? If you look at how when the Fed has cut in the past, it's usually followed by recession. So this is a possible headwind that people are talking about that, hey, usually there's a recession that follows, right? The last time during COVID, and of course the financial crisis and the dot-com bubble and 1990s recession, and of course the 80s after we came out of stagflationary 1970s period, right? And now there's also another potential headwind, which is the an uninverting yield curve of the 2 and 10 years, right? Usually, let's just zoom out and we'll look at every time we go below the 0% mark and then we uninvert back, there's always followed by a recession, right? So this is another potential headwind that we should look out for. Now, it's not guaranteed that's going to happen right away. Sometimes it can take a while before the recession happens, and even when it happens, it could be quite shallow, like we saw in 2020, right? It doesn't have to last a long time. But those are just potential headwinds that say, hey, even though the market is looking good, even though inflation is coming down, and even though the Fed is probably going to continue cutting, right? As inflation gets closer and closer to 2%, right? There are potential headwinds, right? And we still haven't seen an official economy. We haven't seen an official recession in over since COVID, basically, for basically 4 years. People were saying we're sort of in a silent recession, which is how I sort of see it. I feel like there's a silent recession going on. You look at the working middle class, like things are still expensive. People are still, the wages aren't really keeping up. But officially, there hasn't been a recession yet, so we might be overdue for that, especially with these potential headwinds with the uninverting yield curve, and also with the Fed finally cutting interest rates, and those things tending to precede a recession, right? So just possible headwinds going in. We always want to look at all angles, even though I'm overall bullish, right? I mean, just look at this chart; it looks really good, right? We're above all the moving averages. We're going to new all-time highs, right? The only thing I would say is just like, well, we have 5 monthly green candles in a row. So usually the market will give back a couple, 1 or 2 months of red before it goes up higher. And that could be something we're headed into the election cycle, right? The election is coming up. October, November is going to be the next 2 big months, right? The election in November, and that could introduce a bit of volatility. But historically, after the election, we tend to see and move up higher once we have a clear understanding of who the president is and also what their economic policy is going forward. So overall, I'm bullish, despite just a couple of possible headwinds that I'm a little cautious about. But yeah, as long as the CPI continues to show a decline in inflation rates, percentages, I do think that it is green light for the Fed to continue cutting rates, right? And we should see this come down, right? And yeah, so that's it for this video. I think that October is going to be a good month. Probably continue to reach new all-time highs. But again, the next CPI data, we just have to take it one data point at a time, right? The next CPI data is going to be in October 10. And we'll see how the Fed reacts to that. Are they going to continue to cut rates in the next one? Maybe 25 basis points this time instead of 50? Who knows? I mean, we'll see how the market reacts to that and other metrics. So thank you for watching this video. If you found it helpful, useful, and informative, don't forget to like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.